hitting all-time highs. We have FOMC tomorrow. It's a non-farm payroll week. We have natural gas surging again after dropping. We have oil kind of lost at this moment, but there's a lot of stuff going on right now. So it's pretty exciting whenever the markets are like that. You got to love it as a trader. Some really fast movement out there, and again, just some uncertainty in general. I will say Australia's data last night was very, very encouraging. Just because, again, not that anything changed, but again, we had some awesome movement off of it, and it's still going. It's still going, for lack of a better word. With that said, let's jump right into things. We have a bunch to cover today. For those of you that are new here, welcome. I know that they have been sending you some new emails out. So we have some new people coming into the channel. For those of you that don't know me, I'm the president and CEO of Keep Trading Simple. I've been partnered and working, doing some presentations and things like that for Nadex for about, I think, 3 or 4 years now. I do these Tuesday sessions to really give you guys a breakdown of what to look for the rest of the week. If you guys know as well, I am the co-host with Todd. With the Morning Market Movers broadcast. We were trying to figure out how long we've been doing it now, and I think he said maybe like 8 months, something like that. We're not 100% sure. Just it all blends together. We have such a great time doing it. I don't even know. Like, when did we start? I just feel like we've been doing it forever, but it's such a blast every morning. So I host that as well. Before we jump in, let me just refresh you guys for those of you that are repeat customers, and then for the new people, I'm a price action trader. So when I look at charts, I don't have a lot of indicators all over the screen. It'll be interesting. Next week, I am actually speaking for an IG Education Summit, and one of the other co-hosts out there. It's funny. He is the exact kind of opposite of me. What I mean by that is he's all about indicators. And he doesn't like the anti-indicator people. I am the anti-indicator person, and I'm all about price action. So it's so funny. So we are two sides of the same exact coin. So I think it's going to be a really, really cool event. It's always great to hear different viewpoints and see if again, you see things the same way that other people do. With that said, we're going to jump into some charts. We're going to look at some things. I know every week I keep saying I need to update this picture. The boy is 21 days old now, or 24 days old now. And again, the girl's like, that's baby Jin, not big Jin. So my daughter's even giving me a hard time that I need to update this picture. And everybody looks different except Melissa. Melissa's the only one that looks the same in that picture. So I have a beard. My daughter gives me a hard time about it, won't let me shave it off. You know how it is. Got whatever daddy's girl wants, daddy girl's, she gets. So she wants the beard. We're keeping the beard. With that said, let's just dive right into the disclaimer. I want to make sure we have plenty of time to cover everything today. Trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost at the end of their transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented here is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, so here's our agenda for today. I never get to the agenda in 4 minutes, but like I said, there's a lot to cover today, and I want to make sure that we get everything in and with its proper time today. So first things first, we're going to cover upcoming news events. You guys know I absolutely love news trading. There are certain times a day that I think are the ideal opportunities. News is absolutely one of them. Why am I saying that? There's no news today. The rest of this week is chock full of news. Tomorrow is packed. It's non-farm Friday. We got FOMC speaking. There's all kinds of things going on this week. There's so much opportunity out there. I'm going to make sure that we mention kind of what's hot in each of the individual kind of news releases, and potentially how to play them in areas we can look for. Then again, what we're going to do is we'll dive in indices. Indices have had some good movement this morning, and we mentioned it in the broadcast this morning, the Morning Market Movers. Mentioned the VIX, right? We see that VIX coming down. Look for those indices to take off. And that's what happened. The VIX started coming down, and the indices are just taking off, right? They're just skyrocketing. I don't know. Maybe everybody is trying to figure out what the Russell is on, and that's what happened. Whatever the Russell ate yesterday, maybe everybody else is eating the same donut today. But the Russell was just crazy yesterday. And then we'll dive into forex. So forex, the pound is just getting slaughtered today. It's just going down, 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 down. If you had attended yesterday morning, we talked about a potential Harry Potter trade. It triggered, and then another one triggered right after that. So it was great that there's been a couple there. We'll see what other analysis we can do and grab for the rest of the week in forex, and then we'll dive over commodities. Really, the hot thing. Like I feel like you guys ever seen that movie with what is it, Zoolander? Zoolander? Like, oh, natural gas is so hot right now. Natural gas is whether up 3%, down 4%, sideways 4%. It's moving like 3-4%. Pretty much, I would say, all jokes aside, it's pretty much up or down 3 to 5% every single day for the last 2 weeks. So much opportunity there. It's something that almost nobody looks at. It's crazy. It's another one of those futures contracts out there. You can actually trade it at Nadex, but not that many people look at it. But it's had a ton of opportunity. It's all over the place. Now, tomorrow's oil inventory. It has its inventory on Thursday, but again, we'll check the chart out. We'll see what kind of what type of opportunity we have there. With that said, let's go right over it and let's dive into the news because there's a lot of news we got to cover today. So, first things first. All right, first things first. Looking at kind of just that, before I dive into news, the first thing I'm always looking at is this 24-hour pip change. Look at this. Aussie dollar down 104 in the last 24 hours. I mentioned this yesterday that Aussie was going to be the trade, that we were going to look to see if the reduction. And again, we got the disappointment that we were looking for. Again, pound is kind of coming out of nowhere, down 128. That's a daily ATR worth of movement in 24 hours. It's a big move compared to everybody else, obviously minus the Aussie dollar, which is over a daily ATR. Euro pound up 33, showing us that, yeah, we got that European strength versus the pound, but again, versus the dollar, the euro is not doing as well. It's down a little bit. So, yen is strong, right? Yen is strong across the board, even versus the dollar it is. Dollar CAD up, 59. And again, we've been watching that one go lower, 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 lower. Finally found those buyers, and now it's pushing higher as well. So I would say right now the best way to start is last night. Australia disappointed. And when I say disappointed, the entire world thought that they were going to start doing something, reducing taper. Again, we're seeing it right now. FOMC meeting. Will the taper begin officially? Everybody in the world is kind of at the same standpoint right now, right? Taper, taper, taper. When is it coming? Transitory inflation. I mean, it's the same, kind of the same, language back and forth, right? So last night, everybody assumed that they were going to do something. They did nothing. They came in, basically kept everything just the same way it was. We're leaving it unchanged. We're going to continue doing what we're doing. We're not going to change anything until February of next year. Kind of set it all out there. Market didn't like it. Shot it straight to the downside, right? Now, today we have some data coming out of New Zealand. Now, financial stability is not the same, but employment change and unemployment rate obviously are both positive. New Zealand is the first country. They've already done their taper. They've already raised interest rates. They're ahead of the curve of everybody else, and their data is still looking good. Unemployment rate coming down. The world hasn't ended, right? Employment change is not as strong as it was, but again, still on the positive side. Everything looks good there. Again, maybe some late play in that one. Tomorrow, I mentioned already that there's going to be a lot of movement. Now, start off early, right? ECB president is speaking, and then we come in with that ADP non-farm employment change. Not supposed to be as big as last time, right? Not supposed to be as big as last time, but last time was also not supposed to be as big as it was. Okay, so are we due for an employment surprise? The way that the news releases have been kind of occurring is they're telling us one thing and then we get something completely different, right? Supposedly the labor system situation is horrible, but last time, there was an extra 120,000 jobs or 140,000 jobs just with ADP, right? This time, could we get the same thing? That could be a big jobs number. And again, could it be a big market mover? Absolutely. This could set us off tomorrow morning for indices, right? Right at the open. Just boom. This comes at 8:15. Look for some movement. The nice thing about it is, and this is kind of one of those hidden things, one of the things about trading options that you always got to watch out for is how much premium is going to be jacked into that bid-ask spread, right? Because there's volatility associated with it, right? Well, a lot of that comes from the futures market. At 8:15 in the morning, not everybody's trading. So it's not going to be as high as if it was like a 9:30 or 10 o'clock release. So there may be a hidden trade there tomorrow morning. And again, take it in the dollar or in the indices. Because again, I mean, God, what if they come in at only like 200,000 jobs? It's a red day. That's a red day. And then right after that, we have ISM services PMI. Again, expected no change on that one. So the market really hasn't done much. Followed again, 8:15, 10, 10:30, followed by crude oil. Now, crude oil supposedly, and we all know what gas prices look like. Supposedly we are out, right? Supply is, man, there's no oil left. Well, guess what? Wrong. We had 1 week, the 20th, we had just a little tiny downdraw after we had a huge build in surplus at 4.6, then 2.3, then 6.1 more. Then they forecasted high, missed it, and then last week over double the amount than what we thought. This week they're coming in at 1.9. So, OPEC is like, yeah, we're going to keep the forecast where it is. We're not gonna save you. And Russia's been rather silent. And OPEC Plus says we're not gonna make this better for you guys. But we just keep building supply and building supply and building supply. Today at 4 p.m., or I think it's 4 or 5 o'clock p.m., we'll get the API data, and the API data will tell us what the industry says the oil inventory report is going to be. The way that we've been trading this lately is we look to see what the API number is. The market tends to react one way in the overnight, and then boom, the EIA number comes in, and we either get a reversal, and most times it's the reversal. Sometimes it gives us a pullback and gives us an entry, but we're trading that with the 351 system in the morning. Okay, so that's going to be a big one. And then right after that, again, 10:30, we jump to 2. We have FOMC federal funds. Now, between 2 and 2:30, again, we get the statements. There's not going to be any interest rate change. If they did, trust me, that would be like 99.9% of the world would be surprised. It would skyrocket the dollar in strength. It would also probably tank all the markets instantaneously because nobody's expecting any type of raise right now. But here's the scenario. We're already starting to see signs down here. Will taper become official? All the people that pushed off, again, it's November now. There's not really that much time left, right? For them to start it, to just start doing it, it's got to be kicking in now, right? And we're seeing it, right? Will the taper begin officially? Okay. Question is, will it be something similar to what we saw with Australia? Is it going to be less than what the market wanted? If so, that's a very, very weak sign for the dollar. Okay. Very, very weak sign for the dollar. But what will that do with the indices? If nothing changes, if taper's not starting, if they're leaving rates lower, that should further propel the indices higher. It's also going to make inflation a lot more interesting, but it'll drive the indices wild, right? It'll be like a college party with free beer. Like, wow, it'll go crazy, right? Everybody knows taper's coming. We just don't know when. And I feel like at this point, they keep pushing the buck down the line. And remember, Yellen said, it's going to be transitional. I think it was a transitional. I don't know. She keeps mixing up the words and changes the ending a little bit. But, how you make a statement about how it's going to be another 2 more months of inflation, and we'll see it kind of go back to normal next year. I'm like, how's it 2 months when it returns next? I don't know. But if they do absolutely nothing, if they say we're not ready for tapering yet, the labor situation is still bad after the ADP number was good, it is what it is. But again, I don't care what the release is. I don't care what they say. What I'm looking for is some type of catalyst, right? Something to create movement in the market. And again, boom, 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 boom tomorrow. Okay. They will probably get some crazy questions at the press conference. There's a lot going on out there. I mean, with, is Powell going to get reaffirmed in December? Is he still going to be the FOMC chair? Is it going to be one of the other, is Briar going to take it over? I mean, there's a number of people out there, right? So a lot of stuff. That's just Thursday. I'm sorry, that's just Wednesday. Thursday, bam, we have everything for the pound. The same scenario. Again, we have OPEC talking, right? OPEC is probably going to jack oil around on Thursday a little bit. We have all this pound data. Now, again, not expected to change, but you can see down here, traders call on Bank of England to end bond buying early because of inflation. So again, another scenario, another rate statement, another opportunity for the market to be disappointed if the central bank there does nothing. And again, the pound's already getting slaughtered, right? Pound is, again, it's getting creamed today. And then we have unemployment claims, again, expected to be lower, right? Again, the labor market's horrible, supposedly, but yet it's lower unemployment claims. And then again, we have 2 late morning releases. Friday. Now, again, if Wednesday was crazy, Friday's even more fun, right? We have the CAD data. We have unemployment. Unemployment rate is supposed to go down in Canada. Unemployment change is supposed to be good. Hourly earnings are still going up, but not as much as what they thought. The unemployment rate is supposed to go down, but this number is fake, so ignore it. And then we have the unemployment change number. Again, it came in at 194 last time, expected to be a big surge, which again could set us up for a little bit of disappointment. And the reason I say the unemployment rate is not accurate is because this is basically after you've been in the system and you've been looking for a job for a year. it takes you out of the calculation. So if anybody's been in there or not gone back, or is not currently looking still because of COVID concerns or whatever it is, they're not included in that number. So it's right now the labor utilization rate is actually a better rate to use than the unemployment rate, right? Just because we've been in this scenario and situation for such a long time that's still affecting it in the first place. Okay. So not necessarily the best gauge, but non-farm employment change is a good one, right? That's expected to be a big number. The market's looking for a big number. If that comes in at like 250, 275, 285, that's quite a big disappointment. And that could kind of mess up our feel good Friday, right? Could kind of mess up our feel good Friday. So that's it for the week. Like I said, there's a lot there. I mean, Wednesday's chock full. Thursday's got a bunch of good releases. Friday's got all that non-farm, early. I feel like, the weeks we've had lately, there hasn't been great opportunity. This is a heck of a week as far as news releases go. And I always get asked, how do you play it? Like what's the best way to play these? I get this as a question all the time. There's a couple of like standard questions that I guess every educator gets, but it's like, well, which ones are the best ones? How should I trade them? It's the usual suspects and questions. Question is, it depends on the release. It depends on the amount of volatility, right? A lot of times I like those out of the money binaries. There's also opportunities with floors and ceilings on call spreads, which nobody looks at, and it's kind of the hidden gem at Nadex, right? And again, you could even use knockouts if you want, so you have that stop and profit target in there. But just with the volatility we see and the whipsaws back and forth, if you're not really good with your analysis, one problem with those knockouts is if you're not good with your analysis, you're going to get taken out of the trade, and then it goes in the exact direction of what you thought. It just If we've had a lot of movement and there's a lot of craziness like we could obviously have on Friday or even tomorrow, unfortunately, maybe the call spreads are way too far out. So there may not be any call spreads available by 2 o'clock tomorrow if all the craziness happens in the morning. So that's kind of the problem. There's pros and cons to everything over at Nadex, as is with any trading asset. These are the ones we're going to be looking at, right? All right, so let's go into the charts. Let's go up to the indices. Actually, let's start off with the VIX. Okay. I may sneeze here, but I'm trying to hold it in. But if I all of a sudden go silent, I didn't get disconnected. I just was muting you guys. So early this morning, we were sitting right around here, top of this zone. We mentioned, hey, listen, it's been an area buyers have stepped in a few different times, saved it. This is the VIX. It's not anything we're trading at Nadex. But look for a failure, right? Look for it to fall. Look for it to go lower. And if it does go lower, I mean, again, whenever the VIX is going down, it's down 2.19%. This is great for the indices. The volatility is being taken out of the system. Great opportunity, right? That's kind of where we started the market, earlier today. And then this is what we're seeing right now. Now, big push up, right? Big push up. Early this morning, we were talking about a pullback, looking for something small in here. You can see there's the 5 o'clock. Here's on the 15-minute chart, you can see that we did kind of run right into a level, right? If we use this level of basing here, right, it popped up, it pulled back, it based on top of that level, it pulled back and touched it right at the open. Again, there's your opening print for the day. That would have been your trade setup of the morning. Right, nice little push up, and again, we were looking to take profit before the 46.15, and you can see it hit it. It opened the new candle, and it started to push back down again. But your 1 to 3 was obviously well within that range, right? If you're looking for 1 to 3 in your trade setup, 1 to 3 is right there, right? So again, well beyond, no problem with that one. There was your opening trade setup of the day. Now we're pulling back, and what's interesting about this one is normally we see the pullback at about 10:30. We were basing at the 10:30 time frame, but it went all the way across to 11:45 before starting to kind of roll and turn back to the downside. Now, if you look to see what's happening today, tomorrow, today, let's go in, pop this in. You can see that as of right now, there's not really a whole lot going on. There's these Ward's vehicle sales, but that's not anything. There's this economic optimism. And again, not necessarily anything big. And you can see that was 2 hours ago. Market shrugged it off. Okay. So most likely what this is this is profit taking. Okay. Now, what makes this a little bit difficult right now is we are kind of pushing, and there's a couple of them, right? We are pushing kind of the all-time high area. So it's really hard to find new areas up top to be able to grab off of. But every time it goes up there, it also gives us another level. Okay. So we know that we punched through. We got to move this all the way up and say, okay, listen, the last time we were up here, and you know what? Let me drop it down a little bit. Let's drop it down to like a 5 minute and see. Yeah, there we go. That is a better candle formation to be able to draw off of. So right now, I know that I have a psychological level down here And again, this was at the 46.25, so not necessarily super surprised that it turned there. But we have the 4,600 number down below. If we're looking at this one, and this is kind of an interesting scenario, you're seeing some basing right here. You saw kind of a basing and a pullback of this level right here. That's something to kind of watch out for because this could be the next potential area that we kind of hit and bounce higher. Okay. Also, if you're using fibs, for those of you that are using fibs, we could have done it from the morning session, but if we do it really from 9:30 forward, if we're just taking kind of, you know, just taking, you know, just taking the US session, not taking in the overnight stuff, you can see that that level of basing right there just happens to coincide with the 61.8. Now, again, personally, I think the 50 is better than the 61.8, but again, when you have an overlap like that, always something that you got to watch out for. Um, if you want to take it from the lower level as well, you can always take it from the lower level here. Actually, I guess it would be here, right? This would be the low, kind of the low pivot. And really, I would say probably this level. That's where we kind of started this new takeoff point at. You can see that the 50s coming in right there. So for me, I would say watch there's a level around 46, 46.1375. Again, depending on if you've hit your profit target for the day. It's an area that I'd watch out for. It's an area for potential reversal. Right. And again, see what matches up. I don't have Nadex up on my chart right now. But again, based off of what our daily movement is, it's definitely an area where fib traders are going to be looking at this. And again, if enough people are jumping in, that tends to make those markets move and happen. Okay. NQ. So NQ kind of did the same thing, right? Only this one didn't really give us, let me go to the 15. Didn't really give us the pullback we were looking for, right? It hit a zone. We were looking for, listen, with some negativity, we were looking, if we got a break of 15,850, we were looking for a pullback and a drop lower back down to the 15,800. It didn't drop. It just kind of stayed here, 7 o'clock, 8 o'clock right here, 9 o'clock right here when we talked, and it kind of pulled back a little bit, and then boom, off to the races. Okay. Nice thing about it is, let's see, let's put our horizontal line right there. You guys can see that 16,000 is in, right there. So again, there's our psychological level for the next one. And all we did was it kind of came then, pulled back, and continued to push higher. So I would say if we do get the roll, we saw that there in ES, there's a level that looks like it has potential. I would say, unless the world is falling out and I've missed some, major news release over here, which I don't really see anything right now that seems like it's going to be earth shattering. I just want to make sure that nobody shot missiles or something like that. Right now, I would say we start basing here, finding the buyers that are probably sitting around 15,900. Look for this one to come up, but I wouldn't be surprised if we try to close up there at 1,600. Now, remember, tomorrow will be an interesting day with FOMC. It's probably going to be slow in the morning. We'll have an initial bounce right off the news, that ADP number, and then it's probably going to slow down a little bit, or it's going to move to position itself for FOMC. I would say, if anything, although the market and people are asking questions, I really feel like they're going to disappoint tomorrow. Excuse me, dry spot. Sorry, I need to take a little drink there. We just started the heater for the first day, and I panicked right before we started this. I'm like, oh my God, I smell smoke. My house is burning down. I realized, wait a second, we just put the heater on. And you smell that little bit of the dust on the coils for the first time. But now my allergies are like, oh, don't like the dust. Don't like the dust. But yeah, look for this one to come up. I think, I think 1,600 could be something, or 16,000. I think that could be let's make it like an orange one or something. I think that could be on the radar today. The cash market, I believe, hit it yesterday. The futures market did not. Again, any type of roll, and again, I think it'll be led by the ES over there. Now, YM also pushing up, also pulling back, and again, this is a very, very interesting one. So, I love to draw these conclusions. A lot of times, we talked about, we were sitting. Let's see, right here is where we were sitting for my broadcast with Todd. And we talked about, we needed this thing to move quite a substantial chunk at 9:30, which this big red candle right here is 9:30. And we said there's a little bit of a level there that we could grab, right? There's a level, right? The level's sitting right on top of the 58 or the 35,800. It's there. It's decent. Had you taken this in the futures market, you would have got stopped out, right? It went down and it grabbed levels much, much lower. It actually grabbed the level all the way down here, which again, if you were looking at this one, again, tested level, There's your green top. There's your touch. There's your confirmation. There's your touch today. So again, had this one failed, that would have been the next level to grab. Why I'm bringing this up is, again, this is a little bit of an education session. If you were trading a binary off of this, right, an out of the money binary in the 2 hour window from the 9, which is here, to the 11 mark, which is here. Okay. We'll go blue with that one. I'll change this one to green just to not confuse everybody. There's your 2 hour binary window. Had you been looking for a binary somewhere up in this area right here, did you lose any money when it went down? Nope. But what about when it closed up here? You made your full profit on there. So again, one of those things that one of the nice things about the binaries and the call spreads are if the position goes against you, the most you could lose on the trade is the cost to enter it plus the the transaction fee, right? Nice thing about it is you didn't get stopped out. But as it rallied all the way back up again, right? Because everybody's like, oh my God, it's negative. We got to get out of the market. Sell, 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 sell. And the market went higher. Again, even if you use this as your entry level, you can see that it closed well above inside of that time range. Our 1 to 3 was only that range, right? It was from there to there. So you can see it blew well past it within that same 2 hour window. So again, these morning trades with the 2 hour binaries, been nice. Been nice. All right. I would do the same exact thing for me to judge what's going to happen tomorrow morning, 20 hours from now. I don't have a crystal ball. I don't know, but I'll be looking for the same type patterns. Right now, I would say kind of the same scenario. Look for this one to go higher, right? I mean, you can see nothing over here. The next big mark now that we've gone through 50 or 35,900 is going to be right here. The big old 36,000. I think we can hit it by the end of the week. Wednesday's data is good. FOMC says nothing, which I expect them to do. There's our catalyst to be able to get this thing all the way up to 36,000. So again, I think getting long tomorrow morning would be interesting. If you want to do it kind of ahead of time, it's a little bit riskier, but you can always check out those call spreads and kind of see what's out there at 6 p.m. tonight, right? Maybe take an overnight trade. Now Russell, yeah, this was the Russell yesterday, right? Russell was like off to the races. Everybody else was down. It's like, what is the Russell doing? Like, what color pill did the Russell, like the Matrix, right? The red or the blue pill. I don't know which one it was, but it was, everything else was bad, but the Russell was going crazy. So this morning we talked about a little bit of a level here to pull back, and our area that we were sitting at for our morning analysis was right here. Okay, and we talked about how it was rolling over, and really, this is the same thing we saw in the other ones. Is here's our 930. The 930 just went crazy and spiked. Right, we mentioned about some type of a Harry Potter position, and one of the things I like about this is you see how this push today also just happens to be right here. I kind of like how this is basically a double bottom, right? When I say double bottom, I don't mean the chart pattern. I mean that the wick bottoms are the exact same spot. I mentioned and I drew it that we'd be getting this Harry Potter. I can remove. There's a little bit of buyers in there, but that's okay. I'll remove these guys now. We'll leave the big thing on there. This is kind of set up for kind of a Harry Potter, right? Reason why is I know buyers saved it here. I know that buyers saved it here. I know that buyers really kind of saved it here, but we pushed in deep twice and tagged those buyers. The more times we hit, the more that you'd eaten out of that area, the more opportunity we have to the downside. So I'm kind of looking at something along these lines. I'd like to do it at probably, 1 to 3 is sitting right there. So again, well beyond, any type of, there's a little there, but again, well before the retracement all the way back again. I think it's a pretty decent setup, right? Again, make sure we manage the risk on it. I think that's pretty good. And again, at this point, we really don't need much here. We can always put this up top and say, hey, listen, that was the last time we really had any type of spike. We had some basing here. We just refined it. There was the yellow candle push. There's a test. There's a test. And again, I would use this for the top side for kind of the same purposes, right? Along those lines. Okay. But where everything else is up, Russell to me looks like it's going down. I will say, my opinion is this, and this is purely my opinion. If they come up with anything tomorrow at FOMC that talks about it's time for taper to start, taper will begin in December. We're going to go all or nothing. Anything that is pro taper, interest rate, hawkish, anything will tank the Russell. Okay. So the Russell being very, very high, kind of, up on the canyon lip over here. Tomorrow, I'm actually looking for short opportunities with the Russell. I think the ES, I think the NQ, and even the Dow to some extent, I think have good opportunities tomorrow for longs. Again, depending on what we see in the overnight. The Russell, I'm not so much interested in taking along. I'm looking for some disappointing data out of the FOMC, and I'm looking for this one to collapse back down again. And I think 2,300 is really kind of where I'd be willing to kind of look for it. But again, am I just going to blindly get short? No. I needed to do kind of more if this then that. And again, here's a nice little if this then that basing level. It's hit it twice. Push it to the brink. Look for a break below. And again, if you want to put your first target at 23, 25, it's not bad. And then again, I think 23 right around that 2305 is probably target number 2 for me. All right, let's go across natural gas. I'm just looking at natural gas is up 4% already on the day, back up to 540. Here's Australia. So Australia, had you attended our morning sessions, I mentioned yesterday that the Aussie would have been the trade to look at. Right, last night there was nothing else going on. You got to look at it. Price literally started the base, and again, it's kind of the same idea. I mean, we had this level of basing. We expected it to fail. As it pushed into there, it kind of based sideways. It's like, oh yeah, this is going south. But we had a call spread sitting there at 75.20. Okay, how did I know? Well, it was printed at 6 p.m. yesterday, so we knew it was there. Price literally spiked up to the basing level above, so it gave us great opportunity to go in, and you can see that this thing was an absolute runner. Not only did it go down and start messing with this area, which was about a 70 pip mover to the downside, it started to base through, and then what did it do? It broke through, it based, it pulled back, and bam, gave us a second entry into this one in a nice little Harry Potter trade, right? A continuation momentum breakout to the downside, busting out the bottom side of that channel right to the downside. Again, had you not used it for the downside here, all you would have done, and again, we've had the level mark forever, there would have been your entry. And again, it's the same trade. Same trade setup, waiting for a pullback in a downtrend, just continue to push through. But again, the trade started last night. I have it on one of my charts. Let me see. Let me bring it in. Daily contract, 52.50. There you go. All right. So here's let's see. Let me bring it in for you. Whoops. Nope. Hide that. Right. Come on. You can connect. There we go. So here's the Nadex. Here's the Nadex mark. Right. Whoops. I killed it when I did the when I took it off. It's there and there, but I'm not sure exactly why it disappeared on me. Huh. That's interesting. There we go. There we go. Maybe it was too small. Anyway, what I wanted to do is I wanted to draw it on a Nadex chart so you guys can see it. Here is that level of basing up top, right? And go across, right? And you guys can see that here was where the price was, right at news time. You can see at the bottom, right at 11:30. It's this candle. Price went right up, took itself out of the money, made it cheaper, and you can see how far it's run since that time. So same setup here. There's the level of basing. There's the pop right at news time into the top level, which again, confirmed setup. Perfect time, perfect opportunity. And then there's your drop away. So same trade inside of a call spread faction. And people are always like, well, I can never find these, right? I don't find them. Here you go, right? Would you have wanted to take it just in this level, right? Just in this basing level? You could have, right? But what's better? There's more, what has more or less risk, right? There's more risk if you take the position here versus waiting for it to pop up to another level where you had basing, right? So when it pops up, it goes out of the money, price gets cheap. It's after the news release happened. So again, it also sucks a lot of that volatility, that premium from the news out of there, the uncertainty out because the number's in. And then we have the fall away. So again, great trade in the Aussie. Again, it's continuing to drop right at this point. I don't know how much tradable kind of setups we're going to have in this one until tomorrow. FOMC is really, really a big deal, and it's really going to jack this around. Again, if they talk about inflation is bad, gold gets, gold will go higher. It'll drag the Aussie strength up. At the same time, if they talk about inflation, rising interest rates, that will make the dollar stronger. So it's kind of like a battle back and forth of this one. I think most of this has been in the last 24 hours, but again, it just shows how important nighttime news is and when trends start with the Australian dollar. Now, Aussie yen. Aussie yen's basically the same trade setup. Let me go back up a 30-minute. Unfortunately, we had levels up top. You can see that it has the same type of spike candle. Kind of the same scenario, right? We had all this kind of pushing, right? Our one, two, three, and four is what went through. You can see it spiked out of the top, and it kind of, depending on your broker, like, there's how you should have drawn where your top was. So could you have gotten into this one at news? Sure. You could have said, I'm not interested in down here. I don't think it's going to hold, but I want it to pull back. And again, you can see it's quite a large move. It didn't line up as well as the Aussie dollar, but again, to the opposing zone was a 1 to 9.9. So basically a 1 to 10. Risking 1 to make 10 is a nice little play. And again, we knew it was going to be an issue, right? And that's what it did. It took it, it bounced, it confirmed, it went higher, and then now it's pushing lower. So kind of the same thinking. Um, there's a lot of disappointment in the Aussie, but I do feel that tomorrow there's probably going to be a lot of disappointment with the dollar as well. Right now, this one is not only the Aussie being bad, but it's also the yen kind of dominating this one right now. So a lot of ways to do it. I'd love to say, hey, now's a great trade setup, but it's not. The trade happened last night. That's why we warn you. We warn you. You know, we knew that it was going to be a big news release, and again, it's why you always got to look at those Aussie news at night, because this type of movement is huge. And again, it's 100, and right now we're down 132 pips. That's a lot of movement in one day. A lot of movement, all based off of that statement. And by the way, we have the statement tomorrow. The pound has it on Thursday, and then I believe the CAD has it on Friday. Let's see. I believe CAD has it on Friday. Yeah, we have ours tomorrow. Then the pound has it on Thursday. They don't have it. They don't have it on Thursday. On Friday. So the next 2 days are big days. Okay. All right. Euro pound. So Euro pound had an area that last time we talked about 84.79, right? 84.80. You can see it hit it and dropped and hit it and dropped and then came back up and based in front of it. So the level we expected it to break. Unfortunately, it did not give us an entry to the top side. It did not pull all the way back down again. So it's kind of one of those things. I don't think the European Union is in a great area. The nice thing that the euro did is they kind of said when they're going to raise, when they're going to taper. They're dynamically changing their taper. There's no question marks about it at all. There are question marks about the pound, and that's why I think we're seeing this type of weakness, because I think they're everybody's expecting them to disappoint. But like Australia did last night, where everybody expected them to move and they did nothing, right now the market is showing us that the pound is going to do nothing. If they do anything at all, that'll be a positive result, and we should be looking for this one to go south. Okay, so couple things. Let's remove these out of the way. We can see that we do have a little bit of a level that's been tested right above where we are. And there's another little level right there. I would say what's interesting about this is here, actually, you know what? Let's do this. Right now, looking at this, you can see that I'm going to put my horizontal line right there. I can see we have a zone right here, pretty decent. Got another little level of buyers or sellers right here. I also have another little level sitting right in this level right here. Okay. And then it's kind of a little bit off to the races up. So for the pound news in 2 days from now, again, we're bouncing off a level right now, kind of having a little bit of an issue with it. Looks like we got an area of sellers sitting here at 85.16. We got another one. And again, this is probably more over here for that news. Actually, it's here. Oh, not passenger cars. Yeah, right there. 85.31 is also an area for news. And again, we know we got news sitting right there. Okay, that's the big FOMC, the equivalent of FOMC. So do we see a pullback? We'll see. This one is blown up at this point. We don't need it anymore. I will say we should mark off this is a level right here as potentially a reversal point from the top side. Pull that in green. And let's go ahead and draw this, because there's going to be people really, there'll be people that draw from down here, but because the trend changed, it really needs to be up, up. Yeah, it really should be this level like this. And there is a little hidden gem right there. So let's mark that one off. Let's see what else we got in here. That push isn't going to matter. That's where it's stuck right now. Yeah. All right, good. So we know that this is going to be a little bit of a hidden level down here. This would be a great profit target. I would say it's in such close proximity. Turn this one into a profit target for any shorts. Oops. I wanted to do this green and this black. So again, there would be a profit target for any shorts to the downside. And there's probably one sitting in here. I would say there's probably like a Harry Potter kind of a continuation. There's a little hiccup right there. But I'd say there's probably a short sitting right in here. Question is, do we have enough space? Right there. 3 is right there. We do have enough space. And again, nice little area that we could take a bounce off of. Okay. Put that on the watch list. Change that to this color. There you go. It's going to break of 84.89, 84.90. And again, nice little racetrack over here, going back down, and again in the bigger piece of it, that's a 50% retracement for fibs. So again, make sure you're out. There'll be traders that step in like, oh, 50%, let's go. And again, make sure you're out before those guys get in. All right. Euro yen. Euro yen's kind of back and forth. This one we had a quick little hair. We had this little kind of break here. We used that same level. It got short. You could have got short again and got short again a couple different times. You can see that as it came back up, it based and dropped again. So the opposing zone of that one was down here at 31.68. It sliced through it, based, and then kind of used it again. I would say right now we're kind of stuck inside of like a trading channel. You can see that we've been here since October 22nd, so a pretty decent amount. The good thing is we finally broken lower, but the problem is we knew that we had buyers sitting right here. So obviously this first black line was buyers. And we knew that the bottom side of the buyers was there. And for the second level, we know the bottom is right there. So you can see exactly what we ran into, right? And again, pushed in, came back up, pulled into that level, and took off. So again, this side, we don't need that one. It is using the larger, again, this was basically this was the aggressive entry. This is the larger zone. So there's your one. And you have number 2 is sitting down here. Okay. Right now, what I would probably do is not use the same kind of old area. I would say that this trade is done. So let's remove this. Let's take this old area of interest level. And I am going to adjust this, and we're going to put ourselves there. Kind of talk about our kind of top line. Shorts and longs. So I would say right now, it's a decent area. Let's go there. I would say right now, my kind of top and bottom of the channel is going to be 132.33 and 131.61. Okay. Now, again, it's the euro. Ideally, you'd like to get this at a European Open or some type of news, but right now it's being dictated pretty much by the yen. But we'll see. I think either of those two is pretty decent. We just may run out of time. Euro dollar. So, euro. Euro collapsed yesterday. Dinged right off of the 1535. It's a level that we've had for a while. I mean, we've had it all the way since October 12th. Okay. Yesterday was, the stoppage. Now, a lot of people are going to take this and they're going to draw it like this. And they're going to say, look at that. Oh, we got front run. There we go. Right. There is your play. Again, you should already be short this position. Right now, based off the draw, the 1 to 3 on this one is a bit far, but I think we could probably get to it. It's right there, right? So, big question is, can we clear through that 23.6? We're kind of approaching that level right now. It is lunch, and again, with the European market closing really since the U.S. has got in, it's been all about dollar strength. I think this one's probably fine. I mean, you're 3/4, well, not 3/4, probably 2/3 of the way in already. Had you taken the entire 50 to 61.8, probably a little bit much to take on that one, but you guys get the point. There's where fib traders would have been playing this draw. Okay, to the downside. A lot of them would be using the 23.6. That would be the first target there, which I guess is not a horrible position. Let's see. It's 40 pips, so not too bad. But trade's already done. Not much I can give you. Watch out for that 1535. Again, use the top side of this one. I definitely think that's a channel we still want to watch out for. Put that up here at 1683. Okay, so there's kind of your top and bottom channel right now. 1683, 1535. Pound yen. This one's just nothing but murder. So we were sitting here yesterday, right? We talked about this level and it hit it, it hit it again and based. It's like, oh yeah, next time we go, baby. And perfect Terry Potter. This one kicked in yesterday afternoon. We based, we pulled back, we based again, and then dropped, and it's continued to push lower. So now we're starting to see a kind of a reversal. We had that target in. We talked about 155.26 as being the target. It liked that level, and it really kind of gave us another Harry Potter entry, right? Right there, we based, we dropped, we based, we pulled back, we tagged it, and we dropped again. It was kind of a back-to-back pound trade. Now, that pound trade initiated right at the European Open. So, had you been trading that one, that was a pretty easy, right there. It's your 3 o'clock, right? Pretty easy entry. All we did was pull back, gave us a rather minor, small level of risk. All you would have to do is, again, when you were planning this one, you had to say, the opposing zone is at 154.43. That's a 1 to 6. I'll take that every day of the week. There's your 1 to 3, which is really what we're targeting. You can see it blew through it in a matter of an hour. So, it's past and we're kind of consolidating back in right now. We don't need this level again because, again, it was a push through. There was our profit target from before. I would say, there are some sellers sitting right there. There's no doubt it slowed down, then a very strong candle out. And again, that was the stopping point. I would say, let's see, we are 50 pips from that level right now on a retracement. I think if we can get over here, let's see, this is going to be services. It's really this one is the one we're looking for. Yeah, right there. This is kind of what we're looking for ideally. Right? We can let it bounce back and forth. And again, maybe for this, for the European Open tomorrow, right? Maybe if we can rally back and we put ourselves there. I think these are probably the two scenarios that we are looking for. Right? We need a little bit of strength to come back in the pound. I think if we get up tomorrow, disappointing data in the pound again, we can drive lower. I think if we can rally back up again, I think there'll be some disappointment. Again, they're talking about, taper, taper, taper. You should taper, you should taper, you should taper. And if they don't do anything, I feel like that gives us excuse me, that gives us a nice chunk of weakness, right? I like it because it has what? 155. Anything with fives is good, and then 50, right? So again, psychological number there, 155 and a half. Pretty decent level. And again, I think downside, if we're able to grind lower, I will say if we're able to grind lower and we end up over here, down here at 155.50 or I'm sorry, 154.50, which is right here, just a little bit above this right there. Again, that's a great long opportunity for the their monetary policy report. So, a couple scenarios to play out, but right now we're consolidating in. Their market is closed. It's being dragged around by the yen a little bit, but it's going to run out of steam very, very fast. Pound dollar. So, pound dollar. Kind of the same scenario. We had targets down below, right? We had this little piece, this little setup yesterday at noon. Again, grabbed it, pushed all the way down. Nice 1 to 3. Had some issues at the bottom, but again, you guys can see it touched and went past. But it did hit 1, 2, 3, and there's hit number 4. Right? And then it based in there. So you expected this one to drop lower. It did drop, it did base, it did pull back. So again, you could have taken a Harry Potter on this one. It was unfortunately at 10:30, which kind of adds a little bit an added level of risk in there. Right now, I would say again, it's kind of a similar scenario. Pound is getting kind of slaughtered. I want to see where it positions itself. If we look back, you can see that where price is right now. We're sitting right in this level. This level's not great. This level's okay. I guess there could be an argument made that there's a level sitting right there, right? And again, it kind of got bounced off of. That's probably the best opportunity we have for something long. Is it the best? No, not really. I think the 135, 38 is better. But with lack of any other zones down there, this is probably the next area where it's going to stop. And like I said, this zone just got beat up here, 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 here. That's number 4. We're no longer interested in trading anything long off of it. And again, from the short, it was a target. Once it based, yeah, you go short, right? You're going short. And the entry would have been on this side. So right now, I would say profit targets first. 135.84. Okay. We got some interesting things coming down the road here. Got this nice little racetrack over here too, a little basin racetrack. Those are all coming into play, but we got a little bit more room to run on those. Okay, so I would say watch out for those 2 levels next in the pound. I mean, ideally, heck, if we can get all the way down here, that'd be a great little trade on Thursday. Dollar CAD. So dollar CAD overall, you can see it's up 60 points. Whoops, not that one. So we had been messing with this 23 level. We hit it, and then it had been really kind of stuck right in this middle. As of yesterday at about noon, we finally started to grind higher, grind higher, grind higher, grind higher. Missed entry at 124.22. Started to kind of push down, push down, push down, push down, push down. And then right here at that 11 o'clock window, we got the bottom. We pulled back up, and we just hit the zone. So right now, there's probably not enough time to take this one today before we start running out of steam. The API inventory report will affect us a little bit. Again, if they're showing any type of reduction in supply, that will make oil more expensive. Oil more expensive will strengthen the CAD, which again should take us to the downside. So I would say the way that this one is set up now, it's a little bit early, but it's kind of a proxy of a proxy, if that makes sense, right? The dollar CAD is a proxy for oil, right? So when we see the oil inventory report, again, if that moves oil in the correct direction, it will also move CAD in this direction. I would say that that's kind of how it's more set up right now. So I don't really have a trade set up. Like I said, this is an area we've talked about taking shorts from 122.22. It just hit. It's kind of flirting with that level right now. If this was tomorrow morning for inventory, I would love it for a short. We got a little bit extra time right now. So, you could try to play something this afternoon, or you can wait till the Nadex contracts end and see if you can find something in the overnight. But I would say we're at the upper end of that channel. Last time we were here, sellers stepped in. But again, we may have to play a proxy play on that one. Again, FOMC will affect this. Any weakness in FOMC, FOMC should mention oil tomorrow, but any weakness whatsoever with FOMC tomorrow, that is also a weak dollar, strong CAD play, taking it back down to 123. I think we can get back down to 123. We'll see what type of explosion, what type of fireworks occur tomorrow. Dollar Swiss. Dollar Swiss went down big, missed our entry. Yeah. Gotta hate when this happens. We had an entry 4 pips lower. Missed it, dropped in. Maybe some people got this little, double bottom. Kind of got a little screwed up ideal, but I'd say we're good until this runs a little bit higher. Now, kind of a similar scenario as the dollar CAD just was. Whoops, let's not turn this pumpkin. Let's turn it this color. Right now we are, let's see, about 20 pips off. I think there's 2 possible scenarios for this one. Right now, I would expect it to continue to push higher. I think we have one scenario is here, and this is the European Open, right? European Open, I think there is one scenario. And then I think scenario number 2 is going to be right 14, right there. Okay. Those are kind of the 2 areas that I'm looking for potential shorts off of. I think either one of them could be decent. It's an area that's been there before, and they're both setting up the same way. Right now, we're seeing dollar strength. I think if they're expecting the FOMC to change something, that would be dollar strength. I think they push it down in the overnight, right? If it comes up and it's flirting on this high side where we've seen sellers step in, again, if they disappoint, we're going to do nothing. All the inflation is transitory. The labor market is weak. The world is ending, yada, yada, yada. Again, that is also another reason for dollar weakness to continue. Okay. So I think both the setups are probably pretty decent, but we'll see what happens to the overnight. All right. So we had the one long. If we use that same level, right? Once it started to kind of hit and base in here, we're not really interested. It kind of, like if you really, really, really wanted to say, oh, did we get short? There could have been an argument made that we should have gotten short from this level. It did not really give us the entry. It did base in there, which you got to love. It did go lower, which you got to love. It kind of pulled up again. It's one of those ones. It's live time. You most likely would not have gotten short that one. It's nice to look back and say, yeah, I did it. I think you're kind of cherry picking a little bit. It did break. We were expecting a break there. Did it give us the ideal kind of if this then that? Like if you had preset that one and said, "Yep, we're going short," you probably would have missed that one. It did great. It did great. It went much lower. Right now, I would say that again we're at an area where we're looking for a roll. This one's a little bit different in that we've seen yen strength in a lot of the other candles. This one is more dollar strength, yen weakness. So it doesn't quite line up. This one is again been a bit more choppy. You can see it's been very back and forth. I'd say 112.99 or 113. That's pretty much right there. Let's see. Click, 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 click. Right there. So you can see 113 is pretty much a buying area. Again, we're almost there. We've almost hit it. It hasn't hit it with this last level of basing. I think there's a couple things we got to watch out for. Obviously that trade is done now. I mean, if you want to be a little bit more conservative, because again, we're kind of at lunchtime for most traders. I think if you're looking for something, again, it kind of coincides with this area, right? The old area of interest level up here at 114, right? And again, this is a trap play, right? It breaks 114. People are like, yep, broke 114. We're going long, right? And then they go long and it comes back against them. So, I'd say, watch out for something small there. Could be an afternoon base trade. Whoops. Oh, man, I had it right at 3. There we go. Okay. All right. Let's go into the craziness, the madhouse. So here's oil. Oil, I don't think has any idea what it wants to do today, right? Oil is kind of at a loss right now. And when I say loss, I mean, yeah, it's down 0.3. That's not what I mean. Look at the indecisiveness back and forth. So it's kind of like a little scenario. I would say this is probably medium. It's not necessarily little, but yeah, it was a very quick down. And what was funny about this one is look, it opened here, went down, came all the way back up again, and closed right where it opened. So it did all of its own work in its own session and then just continued down. And now we're rallying back up again. So the question is, do we do this? Does it come right back up in here? And does it close at $84 today in preparation for the API report? The reason why it's slow again, everybody knows inventories tomorrow. API will be a big deal. OPEC Plus is speaking on Thursday. So there's a lot of news about to come in that we need to watch out for. OPEC loves it at $85. I don't know that it needs to, I don't think right now anything demand wise justifies it that high. But I would say that there's probably, we bounced off this level, one here, and here, and then there's a big push. I would say if we can break through, right, and this is a big if, right? If we can break through 82.71, I think there's a short. Again, all this is kind of pre-positioning for what the news is supposed to be, just based off of what we've seen, right? But a break of 82.71, we don't have buyers stepping in till a little bit lower down, right? We know that buyers from that level would be stepping in here, right? So plenty of room for that one to run. I think this one rallies up for the rest of today, gets back up in these upper reaches, and the question is, we'll see where we turn. But again, end of business, look for that API report. Again, what it's been doing is it's been helping the move from that time till the European session. Then we'll check the European session, and then again tomorrow morning, 351. 351 is the way to go. Natural gas. Yeah, natural gas is up 6.75%. So yesterday morning we called this one coming down to that 52.20 to 50. I'm sorry, not 52. $5.20 down to 5.13. It did. It came down. I missed it by just a little bit when I drawn my candle. So it did come down. Right now we can remove this. We got this one out. I think this one we should probably pull this back and talk about this gap level right here. Okay. Again, old area of interest. That'll be our next little level right there. All right. So we're sitting in a level right now at 52.50 or 52.50. $5.52. right? So we'll see what it's able to do. It's 1 o'clock. This one only has a little bit of time left in it. Closes a little bit early. Doesn't make it till the end of the day. It's not a 4 o'clock closer. So we'll see. Today's a big day up. And again, a lot of that's probably because of the cold and everything else. I don't even think. Let me see. Is there any news on daily effects? More. I always like to check this one out. Whoops. Currencies, commodities, natural gas. Let's see. Was there anything big? Crude oil. Let's see. Yeah, there's a little bit of news. I'll drag this in so you guys can see it. If you want to read more about this one, I'll show you how to get to it right there. You should be able to see it now. Let's pull this up. All right. So whenever you see movement like this, you always want to kind of check out and see what's going on. So you can see there was an article today, why COP26 matters for the markets, and there's a big piece in here. It's it's the global conference in Glasgow. President Biden has made some comments about it. That yeah, we're going to do more. We're going to do more. I don't know. You got to look at both sides of the aisle in this one. I know why we withdrew from the climate accord because countries that are saying that we're going to do all these things do not do it. I think there needs to be more global pressure, particularly on countries like China that is saying that they're doing everything, and then all the data comes out and like, nope, we didn't do any of that stuff. It's like, yes, that's the climate accord only works if everybody does what they say they're going to do. But this is again, there's a big article in here why natural gas is in there, observed, simulated. So again, if you want to read it in here, talking about all the climate change in here, great. That's probably the reason why this is jumping. Probably some headlines from there. So, but all I'm saying is, whenever you see something kind of go out, 6.75% is more than what the average move is. If you're getting that much movement today, there's going to be profit taking. Everybody that's long this that is driving the price higher, there will be a rollover at some point. I think $5.52 is probably a decent first rollover. If it continues to drive higher based off additional comments, $5.77 is probably number two. There's absolutely no shortage of natural gas. Right, there is. OPEC is basically the United States and Russia for natural gas. We got tons of it here, right? Pennsylvania's got tons and tons of it, so there's no shortage. This is all kind of perceived shortages. It's definitely an outlier for a day. Being up 7% is more than anything. I look for a rollover. Either of these two levels, I think, is probably pretty decent. Problem with the $5.52 is we're running out of time. Right, market's going to close in a little bit, but I think both are good shorts. Gold is just ugly. Yesterday, I said gold needs to get back up to 1,800. 1,800 is a great baseline. It tried, but look at all the wicks in this. There's so much indecision right now. And really, inflation, all the inflationary plays right now, typically where we see gold being the beneficiary of inflation is all going into the cryptos. Again, Bitcoin is up 4% today. Ethereum is up 4% today. All inflation is being banked over there. I think it's extremely risky. Comments were made yesterday that all cryptos should be regulated the same way the banks are. Absolutely, they should be. But I think this market needs to be very, very cautious. Okay, all it takes is one ruling and one outlawing, and when it becomes non-legal tender to make trades and accept payments in an entire country, a la China, yeah, and again, particularly with talking about climate change, China outlawed it, banned it because it is extremely environmentally unfriendly, produced a whole heck of a lot of heat. So what happened is now the United States is the number one mining country. If you're looking at cutting emissions and cutting, something small, Bitcoin mining and things like that, discouraging that would obviously go and be helpful for climate change. So yeah, be cautious. Let's check silver. Silver is at least falling away. So silver's come down. We had this profit target. We talked about any shorts taken from that 24 level. Look at it. It hit 23.50. It is now hit. This morning is really kind of pushed to the downside. Remember Wall Street bets back in the day? They were talking about how this was going to be at $100 by the end of the year. We're November 2nd, so this thing needs to go $36 in the next month up, right? By the end of this month, it should be $56, right? Because they were going to take down Wall Street using silver. Silver's down 2.45% today. It's what? Wow, gold's down 0.28, so 10 times as much. Yeah, not looking good. The 1 month is up for silver, but yeah, year to date 11% down, right? not looking good. A week it's down 3, 3 months it's 7, last 6 months down 14. So yeah, over the last year it's been down 3. So not really working out well. Although I will say this is quite a, kind of an outlier for the metals. It is down in an area where we have seen some basing and some buying. It's not an extreme range. That range is coming down to what, 23.19? But again, 2350 psychological level starting to base off again. I'm sure it's profit taking. This market closes in 25 minutes. So again, it's probably going to level out a little bit. Look at it tomorrow. Again, if they are mentioning inflation, controlling inflation, if they're going to give us the same inflation, doesn't matter. Again, look to be able to, gold and silver are probably negative areas where we need to look. And again, those cryptos are probably, probably have a good day tomorrow, right? Probably have a good day. Yeah, even Doji is up a little bit. So, and again, TLT is up, right? Bond values are going higher. So, yeah, kind of interesting. All right. So with that said, don't forget tomorrow is going to be a very, very big day, right? A lot of stuff going on. ADP, oil, ISM, FOMC statements. There could be disappointment all over the place. And as of right now, look at this. The pound is now retracing back again. We mentioned that earlier today. Look for that retracing. Aussie has taken over the top spot. Again, with gold not doing as well, it's not surprising. With that said, let's go across. Make sure you guys mark your calendar. Don't forget, right? Don't forget, as of next week, we will not be broadcasting because we have at least I have the IG event next week, so I will be not doing this session. The next time we'll be back on for the Nadex weekly charts and analysis will be November 16th. But if you guys are able to attend, check out the session. It is more forex based than it is. Obviously it's for IG. It's a forex based talk, but it's going to be pretty fun. I got some kind of cool things in there for you, and again, we'll cover it. We'll cover it all then. So I'll see you guys tomorrow morning for the morning market movers, and if not, I will catch you guys in 2 weeks. If you guys just guessed the Tuesday sessions on again, not I can't believe I'm saying this. November 16th, halfway through November already. It just started, and we're already talking about the middle. With that said, you guys have a great trading day, great trading week, and if you have any questions, you guys are more than welcome to email me, support at keeptradingsimple.com, or reach out to Nadex, and they can help you as well. Thank you so much. You guys take care. Have a good one.